Welcome to another episode of the Pocket Mastermind podcast. I'm going to ask a question. Have you ever wondered what it would be like to take a company from early stage startup all the way through to exit or IPO? And perhaps you're a founder of a beginning, starting that journey right now. Well, to my guest today is Lomit Patel, and he has been on this journey more than once. And so he's going to share his experience of going on that journey and give you some tips and advice around what you can do to increase your chances of growing to that point, and anything that might be useful to give you a head start on that journey. So Lomit is currently the Vice President of IMVU, and he's a startup advisor and also author of the best-selling book Lean AI, how innovative startups use artificial intelligence to grow. So perfectly poised for this conversation. Lomit, welcome to the Pocket Mastermind podcast.
Excited to be here. Thanks for having me.
Hey, no, welcome. Before we started recording, we were just saying that you are originally from these fair shores, but moved over to San Francisco quite some time ago. So let's start with that journey. How did you end up in San Francisco, and how did you become kind of Mr. Startup? Because you've done this a few times, and then we'll get into some of the detail around the mechanics of growth.
Yeah, sure. So I pretty much grew up in London for the most part of my formative years, and I moved over to like the States in the late 90s for business school. And what motivated me to sort of move out here was when I graduated, I loved marketing, and I was working for a couple of years, and primarily a lot of the marketing that I was doing back in England at the time was all around like offline, direct mail, print, radio advertising, and but the thing that really fascinated me at the time was there was a lot of this stuff that was starting to come up in America around online and internet marketing. So there's a lot of these like .com companies that were coming up, like Yahoo.com, AOL, and that sort of fascinated me because I wanted to be a part of that action, and I knew none of that at the time was happening in England. So the best way to sort of learn about it was to sort of move over to the States, which was what originally took me over. So I came over as a student, kind of did my like MBA in marketing here, and generally, like when you come over as a student, then they sort of give you a visa, right? You can kind of get a company to sort of sponsor you, and for me, that was the opportunity. Like once I came over, I initially sort of worked in Chicago for like 4 or 5 years at an internet company, but just like anything, if you want to be an actor, you need to figure out your way to get to Hollywood. If you want to be in startups, figure out a way to get to San Francisco. And so, so what I would say is, like growing up, like in England, it wasn't like I was talking about, hey, I want to be in San Francisco. None of those plans were like manifesting themselves. The plan that was manifesting was I was really into tech from a young age. I was kind of, the kid that loved to like,
Mm.
check out different devices and learn about new stuff. And and what I came to realize was, a lot of these things actually start off as startup companies, because it's not like these companies are big, like Apple and
Hmm.
Microsoft. I mean, all of these were like startups, and generally, if you get to San Francisco, there's a lot of these companies out here, and they're always hiring, for new people, because ultimately, you know, eh, there's a lot of investment that happens out here with venture capitals lists, and so and what fascinated me about startups is the fact, well, one or two things, but primarily it's that, if you join a company early enough, you get to learn so much stuff, right?
Hmm.
Because it's like it's kind of the wild west of like throwing as much of things against the wall and figuring out what's going to stick, right? And so, for me, that was that, and the second part of it was, with risk and reward, because ultimately, the chances of any startup succeeding are really small. It's like, 95% failure,
Hmm.
right? So, 5% will make it. But so what I tried to do was change my mindset around that, which was, if, ultimately, you want to work hard and hopefully be one of those 5% that make it. But even if you don't, the way I looked at it was, what can I learn in the process? Because this, the experience that I could get working in any one of these startups will be more profound than going to work for a big company. Because ultimately, I'll just be siloed into a certain
Hmm.
team or department. And then on top of that, you know, uh, the other thing with any startup, most startups, the ones that survive are the ones that end up coming up with a great product or service that's going to disrupt kind of what already out there, right? Because ultimately, if you can't come up with anything that's different and better, and generally it's going to be at least 10 or 100 times better, no, there's no reason for anybody to like stop doing what they're doing and adopt this new thing that you're coming up with. And so, you know so I would say it's basically, it was the learning thing that really fascinated me. The risk was, and the risk and reward obviously, is great because because if you work hard, there could be some kind of payoff
Hmm.
at the end. But but uh, but the most important thing was, I didn't really think about this obviously when I was younger, but building a network is so important. And when you get into companies really early on, I mean, you could be working shoulders to shoulders with like folks like, Elon Musk that,
Hmm.
most people know now, but a lot, but the idea is you come across a lot of
Yeah.
these people that people kind of look up to now, but the reality is you kind of start seeing them as people and humans, and and it makes a big change because ultimately, most of the early teams at startups are a lot of smart people because it takes, it's like, building, I'm a big like football fan. I mean, Liverpool won the championship this year, so I'm really happy because it's taken over 30 years. But the idea is, in order to win a championship, you got to get the right mix of players in place, and the same thing goes with building a business. You got to have the right characters in place, right? Because not everybody can be a superstar, but you got to have people that specialize in different areas and have the chemistry where it all comes together. And
And that must
and
be hard. That must be one of the most challenging things at start because
yeah.
I think a lot of people that are attracted to the startup world tend to want to be superstars, right? So there's ego clashes must be one of the challenges of early stage startup, right?
It is, and so generally, what I've found is, the ones that end up becoming, or at least the ones that I've been part of that ended up, as you defined as an exit over here is kind of like, you know, kind of the payday, so to speak.
Mm.
It's like when a company gets acquired or they end up going IPO. But the ones that kind of make it to that are usually the ones that keep their egos in check, because otherwise it becomes more about any one individual rather than team, and that's when things kind of get off track, because ultimately you're trying to manage people versus managing the business.
Yeah, exactly. And
Yeah.
what fascinates me is that it's how do they, and one of the things I think I see from watching some startups is I think some try to go too fast too soon, over leverage, and somehow they manage to attract huge amounts of VC and then aren't able to deliver. And there's been a kind of, I think, been a lot of that in Silicon Valley for the last few years, right? There seems to be a undertone of unrest with VC now that they're not getting the returns that they were hoping to get, and it'd be interesting to get your take on living there and what your experience is of that.
Yeah, the truth is the economy's been pretty good here for a while, and generally what happens, I've actually lived through a couple of like recessions, so I know, everything doesn't always go up, you
Yeah.
know. But the truth is, VCs ultimately are taking bets, right, on different companies, and they know like 1 in 10 is going to work out. But but the idea is you can't just sit on money, because money, just sitting on money doesn't, like, doesn't get your payback, right? And so generally what's been happening is, it's like a blessing and a curse to take money, right? Because the more money you take, that means you value business at a higher value, and that means, ultimately, to get to the end, you have to be so much bigger, right? Or else, the VCs aren't going to get the return they're looking for. Yeah, and what I would say is, generally, what's been happening, at least in the last like 4 or 5 years, is generally the way companies used to sort of, end up like going IPO or getting acquired was because it was harder to raise money to get super big. And so you had to do some kind of exit event to try and, get to access to more capital to ultimately become like a unicorn. What they call unicorns here, like companies that are like, generating over $1 billion or more in revenue. But the sea shift has been that more companies have been holding back from doing those types of exits because they've been pumped up with a lot more capital, because there's been a lot more capital that's flowing around, because ultimately a lot of this capital ends up coming from different institutions, right? Because it's when money's more freely available, there's no point keeping it in the bank. So just like most people, you either put it in the stock market or you give it to these VCs who create these different funds and the idea is with these funds, they usually have like a 7 to 10 year time frame where they invest it. And so generally a lot of these funds were coming up, that were getting pumped up with money, and so a lot of that was ended up going into a lot of tech companies. And the downside of that is that, more tech companies were delaying to go IPO because ultimately, there wasn't that same motivation that you needed to go IPO early. And so then by the time they were waiting to finally go, what people came to realize is that, which should be a shocker, that most of these guys weren't making any money, right? I mean, business 101 is, you could be making $1 billion in revenue, but if you're spending over $1 billion to get there,
You're going backwards, yeah.
no, your local, like, neighborhood store is probably making more profit than these guys, right? but
It's
but
nuts.
it's nuts. It's nuts.
It's not too dissimilar to the dot-com bubble,
It,
right? But that's
yeah,
exactly what happened when
yeah,
companies like Yahoo were, I don't know, were they 1500 PE or something ridiculous at one point? It's like
yeah,
somebody at
yeah,
some point you've got to look and say, where's the valuation versus what the intrinsic value of the business? There has to
yeah.
be some kind of tallying up somewhere along the line, otherwise there's going to be no return.
That's right. So I would say, I mean, the truth is, it's between, some form of reality and then some form of like fantasy, right?
Yes.
And ultimately, I mean, what what I've come to realize is that your business is really worth whatever somebody's willing to pay for it at the end of the day. And yeah, when things are going great, you know everything looks more shiny than it is. And then when things start to go a little bit haywire like it is now, then people start going back to basics, like, oh, by the way, so what is your real profitability? How much does it really cost to acquire customers? How much does it cost to keep the lights on, so to speak, right? But yeah, I mean, generally, you know, the mantra here is to grow fast, right? And that really stems from the fact that, most VCs want to get their money back within like 5 to 7 years.
Hmm.
And so it's like, I mean an example is like, a business is like having a baby, right? I mean, generally you kind of go through elementary school, middle school, and high school, but here you don't have that many years to get to let it mature up to get to high school. You literally are born before you can even crawl. You got to start you
Running.
run in, and before you could even run, you got to start winning that race. Because if you're not winning the race by then, so many people betted on that baby to become, not only a high school but go to university and graduate, within
Yeah.
a span of like 5 years, which, as you know, humanly isn't really possible unless you take a lot of risks. And so that's what ends up happening. People, and that's my role actually in startups, which is what I love doing. I ended up specializing in the area around, customer acquisition, retention, and monetization, primarily because, when you join companies early, once you have a product, that's like getting the ticket to get into the game. But but
Mm.
but having a great product, doesn't mean that anybody knows about it or people are going to come and use it. So that's where, somebody like my role of heading up growth is pretty much like growth marketing, but it's kind of a new term where instead of, in marketing you kind of focused on certain parts of like the customer funnel. Here you focus on the entire customer funnel from, how do you acquire customers, and then, how do you engage, how do you retain those customers, and then, quickly try to figure out how you're going to monetize and what's the business model on how you can make money. And so, the fun part of my job is basically you get to sort of sit in the front seat of this like crazy high speed train, and you're literally like, sitting right there with the founder, because he's kind of looking at you and say, are we going to make a left here or are we going to make a right here, because every day you're kind of making decisions on, how you're going to get the business closer to the final destination, which is going to please the investors, right? And the idea is ideally to get there by spending the least amount of money, so then you don't have to keep raising money. But the truth is, you always have to sort of raise strategically at certain intervals in that journey, primarily because what happens is once you start doing something that's working, then more people start to find out about it. Then you start getting all these like, me too's in competitors, pseudo competitors coming into the marketplace. Then it becomes like, oh shoot, you got to start looking over your back, like, hold on, where did they come from? Oh, forget them. I mean, then you start getting all these companies that already have deep pockets that try to like copy you too, right? So,
That's the challenge,
so
isn't it? Because
that's a challenge. It's like then you get attacked from everywhere, right? Everybody's like around you is like trying to like, then it's like smoke and mirrors, like who's the real deal out of these guys, right? Because ultimately what happens is, when there's more choices, it causes more confusion, right, to the end consumer.
that's true.
Like,
Yeah.
but the fun part about, you know you know being in a startup and then being in this role is that, ultimately, you have a pretty good idea of if the train's actually going to make it to that final destination or not, or if it's time to kind of get off the train, so to speak, right?
And that's the benefit of not
That's
being the founder.
That's right. That's a benefit because, with the founder, you basically have got the seatbelt on, but it ain't coming off, right? you, you stayed to the end because you know what? I mean, you signed all those documents and traded your life in exchange for the money, right?
So true. Yeah. And
Yeah,
and that's, I think, when people look at startups, as to whether that's kind of a career path, and some people take the larger
yeah,
organization as a safer bet, and I think what you just talked about there, being in a much smaller environment with lots of smart people, not being
yeah,
pigeonholed, and ultimately not taking as much risk. Yes, there's a chance that a very high probability that the business you go into may not succeed, but it may survive the next 1, 2, or 3 years, and you can learn a shitload in that 1, 2, or 3
yeah,
years that will set you up to move on to the next one. And like you just said, you're not carrying the real risk, as much as like someone as maybe the founder would be, because it's their baby, their thing. And I think it's worth considering for, obviously there's loads of founders out there that we wanting to do this kind of thing, but other people that want to go and, really up their skill set. Startups are a great breeding ground for that stuff, right?
yeah. Yeah, yeah. Basically, a startup is like, going to work for, um, like, I'm just making up a name maybe people could relate to. It's like working for Richard Branson when he first started Virgin. Obviously, if you stayed through that ride, you would have done well. But even if you did, you'd have learned a ton
Yeah.
amount just by just being around Sir Richard Branson, right? Just for a couple of years. How many people get access to people like that outside of, like, if you get to work with them?
And you see,
Yeah,
a lot of people that go and work for people like that
yeah,
who were there in the early stages or worked for Apple in the early stages or whatever,
yeah,
then go on to become founders of their own startup somewhere else
yeah,
because they've gained so much knowledge. And I think it's very hard to go into that world, particularly as a budding founder, without having grown up in that area in some way. For me that spent a lot of time in corporate, I'd love to, I kind of wish I'd gone down the startup route when I
yeah.
was younger, because then I kind of saw it and thought, hey, that looks like way more fun than this big corporate machine. But then I think, if you then try and go into startup founder mode, for having gone from corporate, it's like, shit, where's the safety net gone? So how do you survive that kind of transition?
You know, one way to to increase your odds as a founder is is to try and maybe bring in another co-founder for the
Mm,
ride. Generally what I've found is, you know, having two versus one, because it is very challenging. Just having all of that pressure on your shoulder. And so ideally, um, the type of teams of founders and co-founders that do well out here is one generally has the business acumen and the other one has the technology acumen. you know
hmm
and a good example is Apple,
Yeah,
when it was Steve
Steve.
Jobs and Steve Wozniak, right? But that's generally become the model where a lot of teams kind of do that. And 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 then the other thing is, to try and increase your odds is ideally, you're working in some of these like companies before, and so you sort of build up a network. So you ideally have an idea like, hey, if I'm going to start a business, I would love to kind of work with, let's say, John Smith, because he was great at this. And so, because ultimately it's about building a team, right?
Mhm.
And so, if you worked for a couple of years, then you've got to know more people, right? And so then you can cherry pick a few people, ideally, who will be as excited about this new venture as you are. And then the other part about being early and worked at some of these other companies with some other founders and CEOs is ultimately that, a lot of, ideally, if some of them have done well, they'll probably end up becoming one of your seed investors,
Mm,
because because they want to kind of, give back to the people that were loyal to them. And then the investors that were in the original business, and I found this, I've ended up building a network, but primarily it's come from doing well in one company and then just being approached for some of these other opportunities, as well as the investors that I got to know are always going to continue to invest in other ventures. And people are going to kind of remember you or remember other people that, that were part of, their previous successes. And so it kind of becomes a bit of a incestuous world, unfortunately. But it's like you got to get in initially, right? Whether
mhm.
it works out or not, because as long as you've done your part to try and help it succeed, people are always going to remember that, right? But if you were the person that was just sitting in the back seat and didn't want to get up and, get off your ass and do anything, then people are going to remember that too. you know but but I would say as founders, having a co-founder is really good. Also trying to have have the right VC investor join, be part of that, because what people don't realize is, with VCs, it isn't a matter of just bringing the money, because that's nice. You want the money, but it's their network and connections too. Because
Mhm.
generally, what you find is VC specialize in certain niches. Like some might just work in like business to consumer apps, or some might work in gaming, some might work in business to business. But because they've done that for so many years, they've built up a network of helping to find you the right people to join your venture, helping to find the right strategic partnerships that could kind of help you fast forward, 3 or 4 years in months, because they can make those introductions. So it's all of those things that that are important too. And then whether people admit it or not, I mean there is an element of luck, but it's probably not luck, but it's a matter of, like, striking when the iron's hot, so to speak,
Not missing opportunities.
not missing opportunities. And the reality is, you know, one thing there is, just trying to stay under under the radar as long as possible, right? Because I mean companies that probably had some great potential, but you know didn't really stay under the radar long enough, the competitors started to come in a lot faster, right, to try and attack your potential market share, or whatever awareness that you were trying to create with this new product. And that kind of hinders your focus and as well.
That's definitely one of the challenges, and I think
Yeah.
I always find it very interesting that there's some companies that have produced a product or a service or an app or whatever that anybody else, any big organization, possibly could have copied if they saw it coming, but for either they saw it coming and didn't bother competing, or they just didn't see it coming. And I'd be interested to know how often it's one of the two. Do you know what I mean? It's kind of like, even like with TikTok
Yeah.
going with the acquisition to Microsoft announced today.
Yeah.
Like TikTok's been going for nearly a decade, but it kind of, where was it until this year, last year? Like, where it kind of really sprung out of nowhere, and how did that not get either acquired real super early by someone like Facebook, or just replicated really early by someone like Facebook?
Yeah, I mean, I can tell you a little bit about TikTok, because ironically, we were working with them like over 2 years ago when nobody else was. We were like one of their early beta partners for the advertising side of the
Mm.
business that did. But you know, the yeah, one of the reasons with TikTok, like you said, people just didn't take it seriously, right? Like, oh, this short form video, this company from China, are they really gonna? But what they didn't realize was that they had deep pockets, right? So they were willing to lose a ton of money to try and create market share. And the other thing, people didn't realize is, how did they end up becoming so big? I tell you how they became big, because they were spending a ton of money on all the existing social networks that were out there, like Facebook and Snapchat and Google. So they basically built, so all of these companies, I mean, are smart enough to know that, hey, this person's spending a ton of money. I love the money. Let's keep taking the money, without really thinking about, hey, this is a Trojan horse that we're basically letting into our ecosystem, and they're basically a shifting our users over to their platform. You know, and
Genius, isn't
it's
it?
genius. I mean, that's literally the way startups work. You got to try and stay under radar as long as possible, and ultimately you got to create this facade where where you just stay visible to the with big businesses. That, I mean, there's so many different stakeholders that you ultimately are just feeding into one side of that business that wants that to hit their goals, which is making advertising revenue. So people that on Facebook and Google that knew about this were happy just to keep quiet, because it was helping them hit their goals, right? Because they were spending billions a year. And the reason behind Microsoft ultimately uh, trying to acquire TikTok is because obviously there's a lot of political stuff that's going
Mm.
on, because it's a Chinese company, and at least here in the US, US is a huge market that they want to bet on. And there's potential risks that they could get banned from here, just like some other countries. So it's better to try and sort of maybe split up that company, and have a majority US company owning that. So then it provides, then it changes the narrative, where, hey, there's this Chinese company that's coming into the US, and to, hey, now it could be a potential US company, where if we go after this company, hundreds of thousands of people could lose their jobs, right? That's a whole different narrative
Mm.
when it comes to a presidential election versus, hey, we're going to attack this company because it's Chinese and it's trying to spy on us or whatever, right? So a lot of it's political, and I think Microsoft's actually benefited from that, right? Because
Yeah.
the truth is TikTok didn't want to be sold, right?
No.
Because I mean, they're like the biggest valued startup out there.
But like you say, it's either you go exit or
Yeah,
you almost go home, because India
yeah,
banned it, and then if the
yeah,
states banned it,
yeah,
your market's
yeah.
really screwed.
You
So
are, and the other thing, one thing I've come to realize is, it's always good to have some conspiracy theories. People don't like it, but it's true. It's like, ultimately you got to follow the money and connect the dots. So, I mean, I'm just brainstorming with you right now, but I know Microsoft hires a ton of people in India, and they're a big contributor to the Indian economy. So potentially, if TikTok belongs to Microsoft, are they going to go after TikTok as hard as they're going after it when does it belong to Microsoft? Because there could be some blowback there to the Indian government too, right? It's just like a game of chess,
of
it's
course.
when you start connecting the dots, right?
And it's interesting. I think it's an interesting evolution of Microsoft to go
Yeah,
into that kind of purchase,
yeah,
because other than kind of like LinkedIn, they haven't really gone down that route. Zuckerberg and Facebook have bought everything else, so it's quite interesting to see Microsoft go, taking a completely different angle, because I don't think generally it really fits in the mind. Like, you think Microsoft, you don't really think youth TikTok, do you? So it's quite
no, no.
mixed.
Yeah, no, you're absolutely right. I mean, for the most part, Microsoft has always been focused on business to business, right? And LinkedIn obviously was kind of a purchase into, but it was still focused on the professional
Yeah,
development sort of area. This is like a whole new sort of you know going out of their core thing. But the other thing that they're thinking about, and everybody else is probably thinking about, is the users that are on TikTok right now are kind of ripe because ultimately it's the next generation of consumers, right? If you can get to them early and you can start influencing them, then it's you know it's a good opportunity where you could build out loyalty with that audience, for the years to come. I'm not sure if you know about, another strategy that Apple did early in the day to grow was that they got integrated into the education systems, where they started giving their their computers to the different schools, so that kids started learning. So a lot of kids here, kind of grew up using the Macs instead of the PCs. So ultimately, what's happened, ultimately when they went to work, I mean, all these companies have now primarily gravitate towards Macs instead of P. So it's playing the long game. It's playing the long game, but it's a strategic thing, and I think it's the same thing that Microsoft's trying to do with TikTok, because these are going to become the next, you know, because you're trying to ultimately figure out, you know, with business, the good thing with business is that, it's exciting, but there's really no end game unless you run out of money, right? because even if you get acquired, I mean, it keeps going. It just takes a different form, and so, ultimately the businesses that become successful are the ones that really figure out how to keep staying in the game. You
yeah.
know,
Simon Sinek talked a lot
yeah,
about the infinite game, and and
yeah,
the companies that end up dying
yeah,
try to play a finite game, and it's not a
yeah,
finite game. And you look at the
yeah,
ones that have gone on and on and on. Like, you look at like JP Morgan and
yeah,
big institutions like that have lasted decade after decade after decade after decade. Is because they're playing the long game.
yeah,
It's how do we keep handing the baton
yeah,
over, rather
yeah,
than how do we try to be a supernova,
yeah,
because there's only one way down, right? You see it with global economies, and you see it with
yeah,
big corporations that they go up and then they don't know where to go, and it fizzles out, and someone else comes and takes their lunch away because they stop investing as well. I think that's part of the problem.
yeah. And I think the last point that you made there is really important, which is, I mean, a lot of these big companies do invest or have, research and development. But the difference is, and I'll give you a good, I'll give you an example because I've worked in startups, is that, when you're working in startup, you're so desperate because you don't even know if the lights are going to stay on the next day. So you're literally working long, crazy hours, but primarily you're working like your life depends on this thing to work out. Versus if you're doing research and development in a big company, you come in at 9, you take your lunch breaks, you leave at 5, because you're still going to get that paycheck the next day or the next month, right? And so generally the level of innovation is so much different, right? Between doing it in a safe environment versus doing it in a high risk environment, which is why a lot of startups end up getting acquired, which ends up becoming like a successful exit. And I've been part of these too, because ultimately, you're trying to solve one problem that the big company isn't really focused on, but ultimately could become valuable to a bigger company. Because with the benefits of being in a big company is a safe corporate environment, but the downside is that it takes a long time to make decisions and pivot and changes.
It's
And
fear as well. There's a
it's
big
fear.
fear,
It's fear.
right?
Yeah. You don't want to be like the person who could kind of be the hero, but could also be the zero too, right? That could.
What I see with the big organizations quite often is
Yeah.
um, they don't want to cannibalize their existing business, and so therefore
Yeah.
don't develop the solution that might cannibalize, but they'll let someone else go down the road develop
Yeah.
the solution that will cannibalize it, to the point where they either go out of business or they have to buy the other business.
That's right.
They could have developed the solution themselves in
Yeah.
house sooner. You
Yeah.
know, I've so many times on these kind of conversations, people at
Yeah.
Kodak come up, right?
Yeah.
Develop digital photography and then
Yeah.
don't pursue it and then go
Yeah.
out of business to digital photography. That kind of thing happens so frequently. And it's just because of that. I think it's the shareholder mentality. We don't want to eat
Yeah.
our own lunch. There's risk, blah, blah,
Yeah.
blah.
Yeah.
But you end up in that position eventually anyway.
You do. And I would say, the biggest thing, um, the biggest thing that sort of encourages that mindset is really, when you're a public company, you basically have to do quarterly earnings, right? Where you have to, share how the business is doing. And so if you really focus a lot on the long term, then you have a couple of consecutive quarterly earnings that don't look good, your share price will start to tank. And then and a lot of people that work in these companies, a lot of the value of the business is really based on the share price, to what you're saying, rather than the true intrinsic value of what the business is really generating or what it could potentially generate. And the good and bad is that generally, a lot of people that work in these big companies, if have some form of their compensation tied to the stock price. If the stock price starts to come down, you're going to end up losing people too, and they can just go work for somebody else, right? So there's a lot of things that sort of goes into that short-term thinking, unfortunately. And so, but that's
And
where the
and a lot of the investment, I think it was 80% in the S&P 500 is
yeah
big institutional investment. So, and they're
yeah
on a short-term
yeah
return expectation. The fund managers are
yeah
targeted on their annual returns.
bonuses
Yeah, exactly. So,
yeah
and the people that they're managing the money for are expecting, X
yeah
percent growth year on
yeah
year. So there is a very short-termist.
it is.
What really feeds the business innovate or lack of innovation and the short-termist view from business is really that in the investor demand for growth. Ironically, you want
Yeah.
which you could potentially get greater growth with a
Yeah.
more long-term view if you did a Warren Buffett style approach.
That's right. Yeah. I mean, and so that's where the exciting opportunity is for anyone who wants to be a founder, or go work in a startup. Is that you know that is that there's always going to be opportunity where things could actually work out because of the short-term mindset that a lot of the big companies take. And so the only way that they can pivot and find that next area of growth is to acquire a company, because ultimately they're acquiring the technology and acquiring a fully functional business that they never really had the infrastructure to, or I wouldn't say the infrastructure, but they never really had the the, the same level of motivation to do it themselves, right? And
Sometimes it's better for them
yeah,
just to pay more at a
yeah,
later stage and
yeah,
buy the solution in
yeah.
than the unknown investment to grow it from seed.
Yeah, I mean, another example, not not that I've ever tried to build my own house. I mean, generally, when you buy a house, you buy one that's sort of already there, right?
Yeah,
But I'm sure you could probably do it a little bit cheap if you if you wanted to try and build it yourself. But the truth is, do you have the patience to do that, right?
true.
And so a lot of and same thing with what one of the best ways to get acquired is ultimately you just become a big enough nuisance to the big company, right? So then they just want to take you out, right?
This is true. So let's talk about some like practical advice
Yeah,
and your guidance through the startup. And I think one of the questions I've got and where this generally fits in, I'll let you decide. But when is it good? When's it a good idea to seek funding? How far do you bootstrap? And I think some companies have moved very quickly in the last 10 or 20 years or whatever to funding probably sooner than they needed to, but they became a thing that it
yeah.
was a prestigious thing that we got VC rather than needing it. And sometimes that can be detrimental, I'd imagine.
Yeah, I mean, the idea is you want to try to hold off funding until you actually have something that's viable, like a product or service. And so you want to try to bootstrap your way into at least a concept of something that's a prototype that somebody can actually take a look at. Because what happens then is that it changes the valuation that somebody will invest into you, versus if you just show somebody something on paper that, hey, I have this great idea, and so it's more like taking a bet on a vision versus something that's very, at least a little bit more flat, functional, or that people can relate to. uh, and the idea is, once you have something, and you want to try to like create a minimal viable product, and try to get something where you can sort of prove that people are willing to either invest time or money for that product or service. That's the one of the the true validations that the product has some legs. And then the that's time when you want to probably try to go and start talking to some VCs. But generally, VCs are only going to be interested in something, for the most part, if it's going to have a large total addressable market.
Hmm.
Where I mean, you could have a great product, but if there's only like 1,000 people that might find it interesting, it's not going to be interesting to a VC, versus something that could have you know uh, millions of people that are interested, because then they know that because they're always thinking about the end game. Like, if I'm putting this money in, how long will it take for us to get a meaningful share here? You know, uh, that will intrinsically increase the value of the business. So it's either going to take one or two exits, where it could either get acquired or it could end up going IPO. And the other thing that I would say is, ideally, when you do raise money, keep in mind that you want to try to raise enough money that gives you some runway, so you don't have to go back and raise money for at least 18 to 24 months. The problem being, because it's a distraction, raising money. I've been part of this, and what happens is you kind of doing this dog and pony show, right? It's I guess it's kind of like dating, because you're trying to sort of speed date to getting married as quickly as possible, but I mean you're gonna get rejected along the way, right? And so you got to keep dusting yourself off and doing that, while at the same time you got to make sure that the business doesn't lose focus, and keeps executing, because ultimately when people do invest in you, it's not only that somebody says, hey, I want to invest in you. Then they go through this whole series of due diligence where it's going to distract, where people are going to come in and do their forensic, accounting to check out that what you're saying is true, interview all your key stakeholders in the business. And so you basically, it's going to cause a distraction. But the idea is, in order to avoid that, you want to try to raise enough. And so part of that really comes down to having, I mean, I mean, everybody will come up with a business plan, and the truth is the business plan is going to pivot and change, but you want to at least come up with something where you can project out what your financials could be. More importantly, in terms of like, how when you take the money, how are you going to use it, and what is your burn rate going to be? Because your burn rate pretty much dictates how long that money is going to last, right? And so, as humans, we always sort of, overestimate what we could do in like a year and underestimate what we could do in 5 years, right? And so, it's always good to, make sure that you have a couple of different like people, reviewing all of those numbers, because as founders, and it's true, as a founder, you got to be the biggest optimist that you believe in what's going to happen, but you also got to, it's hard for you to be the pessimist. So you got to have somebody who can come in and kind of give you that view as well.
Yeah, that's a good point because
Yeah.
you when it's your baby and your
Yeah.
idea, you're going to be sure it's going to be a supernova for sure.
Yeah.
Um,
Yeah.
what about the practicalities of growing? I know we're running low on a bit of time here now,
Yeah.
but what about the practicalities of growing and getting a team? How do you go about finding good people?
Yeah. So what I would say, to to become a successful startup, ultimately it comes down to, solving a problem that 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 a lot of people can relate to. And so, having a great product service can make a big difference, or having the ability to iterate that product service so that it continues to improve. And and could and so for a founder, in order to try and get a or to get a great team, one of the best ways you can do that is by hiring some really smart people, because ultimately smart people know other smart people. And so what happens is, most people that join startups, part of it is they're joining because they believe in the vision of where the company's doing, and where it's looking to go. But the other part is most people join because they want to work for someone that they can learn something from. And so if you bring in, if you're able to attract some really smart people that primarily have done this before, then then they're going to have a network of people that they will probably bring along with them. And or when you put the positions out there, other people will want to come and work for those folks, so they end up becoming like the magnet for attracting talent at the end of the day.
You have
So
like a core team, I guess. You got the
yeah.
founder, and like you said earlier, maybe you've got the kind of the business guy and the
Yeah.
technical guy. I assume you want a numbers guy, you want or girl, obviously,
Yeah. Yeah.
and the same, and your like you were saying, your area is very much around the
Yeah,
growth.
growth and marketing. Yeah, so ideally, in the team, you definitely want somebody who knows technology, and has engineering. You want somebody who knows product really well. You want somebody who knows the numbers and finance. That's important. And you want somebody who knows operations and customer service, and or distribution, or depending on what kind of product or service that you're trying to build. And then and then depending on, like, if it's B2B, then you probably want somebody who can sort of build that pipeline of sales, right? So a salesperson. And if it's more of a business to consumer, then having someone like me, heads up like growth, can sort of manage that entire sort of funnel of building the direct consumer business for you.
Nice. Any last tips before I give you the quick fire, which will need to be quick fire?
Yeah, yeah.
Any other tips for anyone who's like either joining an early stage startup or an early stage founder?
The best tip is never give up. It's like anything. Just I mean, startups are challenging, but a lot of it really comes down to perseverance and endurance. If as long as you don't give up, and when you run into problems, try to figure out ways either to get around it or through it. And I think a lot of that really comes from just surrounding yourself with good people, whether it's people that you end up. I mean, it's really important to hire good people, but beyond that, it's good to try and keep a network of other, talking to other founders that have kind of been on that journey, because you can kind of, I mean, you'd be surprised, but a lot of them want to try to, like, put their hand out and pull others along. So you can definitely learn from that. The other thing you can do is try to bring in some advisors into your business too. It doesn't cost a lot to do that. You could give them a little bit of equity. You don't have to give a lot, but the wisdom that they can bring, again, can help attract you, bringing in the right people to fill in the gaps as your company continues to scale and grow. But I would say, to make, beyond that, always try to be data driven, because everybody have different opinions, but if you truly believe that the data is right, then it kind of removes a lot of kind of needless arguments that can happen, like, hey, should we go in left or right? Because if you trust the data, then the data is going to tell you where you want to go. And just make sure you always focus on the customer. The customer feedback is really important. And the companies that have really done well have always been obsessed about their customer and obsessed about hiring a high caliber of talent, to early on in the business. And now, and the reason why I wrote my book, Lean Startup, is, the biggest way for companies to grow now is how to leverage your data, your customer data, as your superpower. Because now companies are inundated with so much data. If you have the right infrastructure in place, and leverage AI and automation, you don't have to hire a lot of people to try and go through all this data and tell you what it means, because AI can surface a lot of those insights for you, and be able to in real time, help you to make the right decisions to continue to pivot and grow the business, in terms of who's the right customers you want to be attracting, what are the right personalization hooks you want to create in your product that keep them around, and also what are the right ways to monetize these customers, because some people, you could monetize by with creating a subscription service. Some could be where they're making purchases in the product. Another thing could be where it's advertising, but generally it's never just one or the other. It's usually a hybrid, and the more that you have with AI and with automation, the great thing about automation is it enables you to stay lean as long as possible as a startup, because if you can automate a lot of tasks and processes when it comes to executing against the greater business plan that you have, the less you end up burning, right? And the less you end up burning, the less you're going to have somebody putting a bigger and bigger gun against your head, that, hey, we need to get to that safety box and open it up sooner, right? That's the thing, right? The less money you raise, the smaller that gun is against your head.
That's true. Yeah, that's true. There's definitely the more you've got riding, then obviously the greater the pressure is going to be, and
Yeah,
for everyone concerned.
yeah,
And the AI stuff, I'm fascinated with, and we should definitely do a follow up on this and really
yeah.
go deep into how do early stage companies leverage AI, because it's something that it hasn't really been around until now, right? So it's really hitting its stride now.
Yeah, and that's what I really encourage. This is probably the best time to start a business, because the cost to do it is so much lower, as far as AI. can really become your superpower, because it can, it's the cost to access AI isn't as expensive as people think now, because there's so much more computing power that's out there. A lot of your data lives on the cloud, and it's just a matter of for me, the biggest benefit a company has starting now versus starting 5 years ago is the level of tech stack that you can use now, right? And you're not bolted to this legacy tech stack, which end
Mm.
up coming in your technical debt at the end, because it's like you're carrying this backpack of all these like old bad code, that slows you down, versus you're starting out now, you like, the new kid on the block, you basically putting on the best trainers to run the race from this point forward, versus trying to run with those old Nike Air or whatever. Right?
It's a good analogy, yeah, because
Yeah.
there's so many businesses end up getting crippled not too far down the line because
Yeah.
the technical infrastructure is already
Yeah.
way dated, but
Yeah.
they don't have the funding or the ability to then change it, or the pain of going through that change. It's
That's
real
the
hard.
Yeah, and so what happens is generally, you know, they end up just bearing through with that old, because ultimately, as you start raising more money, then it becomes the clock is ticking, right? So do you want to go back and fix the old code, or do you want to keep building on that? And that's what people end up doing. They keep building on that. So it's like, for example, you've broken your leg, and I did break my leg playing football, but you never really let it fully heal. Then you're going to keep like limping your way through life, right?
It's true. You see, like, I guess there's patch built on patch built on patch,
Yeah,
and
yeah,
then at some point you go to try and do some kind of change and
yeah.
innovation, and it wipes the whole thing out because
That's right.
no one knows where the ball of wool starts.
That's right. It's like the House of Cards, right? It just takes one little card at the top. Yeah,
It's so true. Right? Do you have 2 minutes for the quick fire?
I do. Yeah,
Let's
I
do
want to
it.
be part of this. I don't want to miss
Okay,
out on
good.
you.
So number one, do you have a morning routine, and if so, what does it look like? You're clearly up fairly early.
Yeah. So my morning routine consists of having a good cup of tea to start off with, and
Take the
I
pill out of Britain.
I do, yeah. I always have my good English breakfast tea, and then I like to generally when I wake up, I try to like do some visualization in my mind. I'm always trying to like start the day thinking positively, and trying to make sure that the energy around me, is positive, and that comes from, saying some positive affirmations to myself, and then I try to like read a couple of articles, usually around leadership or something inspiring, just to get me started. I have my cup of tea. I try to do some. I always love to exercise. It's just become a habit for me. And while I'm exercising, I generally try to like watch a YouTube video or listen to a podcast. Again, just trying to feed my mind. What what I've don't do, and I haven't done for a long time, is watch the news. I don't like watching news because there's just a lot of negativity out there. So I try to filter what goes in my mind, especially early on. And then I try to do the same thing, like winding down at the end of the day as well. I try to like just try to reflect back on, hey, what went well, and even if something didn't go well, I try to reflect, like if I had a chance to do over, what might have I done differently, just to try and course correct, and end the day not beating myself up, but ending the day like, what did I learn from today? But the other thing I always try to do in the morning and in the evening is just to be grateful that I'm even around, because in this crazy day, we're playing a
True.
game of human tag. You don't know who's tagging you, and that could be like game over with COVID-19. So I mean, I'm just super grateful, and it's not grateful about all the material things. I'm just grateful that I'm still breathing. Right, that's the most important thing, right?
Well, that's a starting point because if that bit
Yeah,
stops,
that's
someone
right.
says,
I mean, everything else. Maybe some people will just want me dead to just enjoy the inheritance, but for me, I want to stay alive and just try to enjoy life as long as possible.
I love that, and definitely, I stopped watching the news a couple of years ago, 2 or 3 years ago.
Yeah,
I used to
yeah,
start every day watching the news, and I used to end every day watching the news.
yeah,
And you realise that it's negativity, and what goes in
yeah,
influences you so greatly as to how you feel about the world, other people, and
yeah,
if you can cut that crap out. And now I
yeah,
just, I now just glance at headline, financial headlines or something that might affect the
yeah,
markets and that kind of stuff. But other than that, that's all
yeah,
the same narrative day in, day out. One day,
yeah,
one day the world's going to end. The next day it's
yeah,
going to be okay, and it's just
yeah,
you got to take it all with a pinch of salt. And you'll always be. People say, "Oh, how do you end up being aware of what's going on?" Well, because when something big enough happens, everyone else
yeah.
talks about it anyway. So you
That's right.
don't need to be that well informed.
Yeah, and the truth is, it's like even if you're informed of something happening, how much are you going to be able to change it for the
True.
most part?
Absolutely. Yeah.
And so the other thing, and this is the way I sort of build like different AI models is ultimately, AI models and human intelligence is kind of the same thing. It's a matter of like inputs and what are the outcomes that you're trying to get to, right? And if you start obsessing so much about the outcomes, you can't really influence the outcomes because that's really a product of what's really going to go in.
Yeah.
That's where I try to focus on the inputs, which is like you said, it's like the inputs, for you or for us or anyone, any human, it really starts with what are you feeding into your mind and what are you feeding into your body, right?
So
Because
true.
that's what you can control, you know, and if you focus on that, then the outputs will take care of itself, right? But and the other thing that I've come to learn too is trying to grow my patience. That's something that I,
You and
I
me both.
yeah, that's a day long habit. I've gotten better at it, but the truth is, going back to just myself, but I see this with a lot of people. It's generally the impatience that kills you more than anything else. It's like, instead of trying to like, play the long game, you try to do things, like make bad investments or bad decisions just along the way. It's instead of just being patient. And
Mm.
like you said, I mean, just if you just put some money in the stock market and just left it there, right? I mean, for the most part, it would be worth more than, you know,
I think it's what
trying to
is it?
take it in and out, in and out.
Average of 7% return
That's
annually
right.
on the
Yeah,
S&P 500,
yeah,
and everyone's trying to
yeah.
beat the market. You might as well just go
I
with the
know.
market.
I know. I know. I mean, another thing is like, like you can relate to this too, right? I mean, just driving in traffic where you're always trying to like cut someone over, but then when you realize you barely save like a minute and a half on your
Exactly.
trip at the end, right? It
And
just felt good in the moment, but
yeah, but you're
yeah,
exhausted by the end of it.
that's right. You're mentally like drained, and you like, whoo! I could have been like, my last car ride, right?
But to save 1 minute, it's absolutely, yeah. You're right. It's
Yeah,
crazy. We do. I think it's
yeah.
because we do this false sense of control, and we want
That's
to
what it is.
control
It's
all this
control.
stuff, and it's
Yeah,
nonsense.
I
Yeah.
know. I know.
3 books you'd recommend and why?
So these are books that have really influenced me. One is How to Win Friends and Influence People by Dale Carnegie. That was a good one.
Yeah,
Um,
I love that
the
book.
other one, the other book, Start with Why by Simon Sinek. I think that's a really good book because it kind of helps you to really figure out what's really going to motivate and drive you. And then I'm going to put this one in there because it's the lean startup for anyone that's really interested in startups. The lean startup by Eric Ries is a great book because it really helps you to really think about um, how to test, learn, and iterate your way to a great product. And obviously the other reason for that is that my book is the next iteration of the lean startup, right?
I
So
love it's a good tactic. I like that.
that's right. Yeah.
That's good. 3 people to follow or listen to.
So I think a lot of people probably know Jay Shetty, right?
Yeah.
Yeah. So I know he obviously is back from England as well. But I've been following him, primarily like he's one of the podcasts that I listen to when I'm working out because for the most part he's it's all about positivity. Uh, uh, Another one, I never really grew up watching too much of like Oprah Winfrey's show, but the thing is, she has a really good podcast now. She does a lot of like kind of mindfulness and spirituality things. So I like listening to her. And there's another one um, that I listen to, and his name is Joe Olstein. So he's a pastor here. It's a big he's pretty well known. Um, as a Christian pastor, but his messages are generally rather than being like kind of hardcore biblical, it's more like put into like everyday speak, which
Nice.
is easy for people to understand.
Which is guy I always liked Jim Rohn for his
Yeah,
interpretation around those ways as well, and I've mentioned Alan Watts loads of
yeah,
times because he was one of the best for me of ever being able to distill all of the spiritual teachings into
yeah.
plain, understandable English. You go, oh yeah, it makes complete sense now.
I,
He
I, I,
decoded the whole thing.
yeah, I was going to say. I mean, people read the Bible, you could learn a lot there, right? I mean, yeah, but
That's the thing. I think the with a lot of the like religious text, it
yeah,
gets shunned because it's religious text.
yeah,
Actually, it's a lot of it is just a handbook for how to
it,
live and how to treat other people,
yeah,
and how to get what you want and how to all of the
yeah.
stuff. It's like it's really a manual for operating this system.
That's right.
And it
Yeah,
gets muddled up within all of the dogma, I think, which is part of why so many people these days kind of shun it and say, "Ah, it's not relevant
yeah,
anymore." But actually, like you just say, you can learn an awful lot from that stuff.
yeah. Like to say, it always takes people to manipulate something, right?
Exactly, it's true. This is true. Three habits or disciplines that you've adopted in your life that you think have made a big difference to you.
So, so it's kind of go back to kind of my routine. I mean, for me, you know, just filtering what goes in my mind is really important. So, the habit of just make sure that that I'm reading good positive things, that I'm listening to good positive things, that I try to take some time out to at least visualize and because ultimately I feel that we are our own worst critics, and so and that's true for me. Like I'm generally hardest on myself. So what I've tried to do is to try and sort of become my best cheerleader as well, and then the other thing, I think it's really important to live kind of a healthy lifestyle. The truth is, I mean, all of us have these like genetic things that we can't control, but what we can control is how we choose to live for ourselves, right? In terms of like exercise and eating healthy. I mean, for me, that's something that I've done from a really young age, and I've continued to do that. And I think it's really important because ultimately, you know, uh, there's always going to be all different forms of stress that comes in life, and I just feel like the better that you're in tuned, like spiritually, physically, and emotionally, the better you can withstand that, right? And because ultimately in life, it's there's always high and low points. The question is that you need to learn to try and stay even keeled and and
Yeah,
and not get carried away when things are great, and not get so depressed when things are low. You know?
it's true. Yeah, I completely agree. I think um, a lot of people, it's so easy now. There's so many temptations of crap, but I think if you can try and be 80, 90% good, in inverted commas, of what
Yeah,
you eat, good diet and stuff,
yeah,
and then enjoy yourself on the 10 or 20,
yeah,
it's far better. If you're always just having whatever you fancy at the time, I think the one of the lessons of this universe is you can have anything you want as long as you're prepared to pay the price, and that goes for taking the easy option. There's a price to pay, right? The same as
that's right. Yeah,
you can sit around and eat ice cream all day if you like, but there's a
yeah,
price to pay.
yeah,
And you can be super fit, but there's a price to pay. So you got to find what does your life look like, and then and live in accordance of that. But yeah, you're right. I think you've got to try and look at. You only get one. I think Jim Rohn said you
Yeah.
only get one. You got nowhere else to live. You better look after this one.
I know. That's the thing. It's like, whether you like it or not, you can change this one. You can either make it bigger or you can make it smaller, right? Just based on how you treat it, right?
So
But
true.
and the other thing I try to like emphasize is that it doesn't matter how successful you become, but if you don't, if you don't feel, if you're not healthy, I mean, you're not going to enjoy it, right?
Yeah, this is
Yeah,
true. Everything
yeah,
starts
yeah,
from your health, your physical health,
yeah,
and your mental health, and you've got to take the time to
yeah,
understand both. I think that's what the other challenge is.
yeah,
Right?
yeah,
Education in those areas is not great,
yeah, yeah,
and we're not, as a species, overly proactive in educating ourselves in those areas, and so we just blindly follow the marketing messages and all the other stuff. And I think you really got to
yeah,
take the time to understand to just a basic level, really, but health, nutrition, that kind of
yeah,
stuff will set you up much
yeah.
better.
And one other thing that I would, at least for me, that's been really important is to just become better at being empathetic. So by that, what I mean is, and I'm fortunate, you don't really realize this till you move to the States, but I mean, for the most part, growing up in England, you're pretty diverse. I mean, you're exposed to like different things. You get to travel to Europe and stuff like that. I mean, most people here don't even travel outside of the state, let alone the cities. I mean, people are a little bit more sheltered here, and so the view of the world is different. It's always about us and me,
Us and
right?
them, yeah.
That's right. And I think being empathetic can help you stand out, because ultimately you're willing to listen, and you're willing to see things from other people's perspective versus just about seeing it from your own perspective. So I think that can be it can really help ultimately, if especially as you go higher up, in your career, or if you try to build companies, because ultimately to build a company, you can't have everybody think and look like you, and do things like you. You got to bring a diverse set of skills and people in, and so being empathetic will enable you to get the best out of the different people that you need to work with to ultimately get the mission done, right? Because a
Yeah,
business is a mission at the end of the day.
so true. Very,
Yeah,
very wise words.
yeah.
3 tools, systems, or apps, or services, whatever, that you now couldn't live without.
So for me, I spend a lot of time on LinkedIn, and you know, part of it is just, I think it's really important to continue to invest in building your network, because and what people don't realize is with LinkedIn, the more you actually, the more value that you put out there, the more people will want to follow you, and the more you become influential, right? Which helps me in a multitude of ways. But for me, I just want to help people, because ultimately I wouldn't be here if people didn't help me, right? So it's a matter of giving back, and but it's also a matter of you know just connecting people, because even if I'm not, for example, hiring, I always know other people that are hiring, and it's good to just connect people to other people, right, and help them.
Hmm.
I feel, in terms of systems, as I mentioned, just having good habits is really important, but also things that are like music and podcasts. So just having those apps, I think it's important. I mean, in the old days, you had to literally go to libraries and read about this stuff. Now you kind of got the world that can just come to you, right? So there's a lot of like things out there that you don't necessarily need to pay for, but it's
Yeah.
just a matter of just tapping into. But yet again, there's a lot of you just got to just have the wisdom to figure out what's the right thing and what's the wrong thing. And then
You've got to get good at filtering. That's what you got to
that's
do.
the whole thing. That's wisdom, right? It comes with filtering. And the other thing is, you're ultimately a product of the people that you hang around with, right? So that's important, and it's not that that if you outgrow people that you're better than them, but the idea is, ultimately, at least for me, I always try to set goals, and where it's not about being better than somebody else, but it's just, it's just being a better version of myself every year, and breaking that down into what can I do this year that will help me to become, better, better in the sense, like, trying to learn something new, trying to be uncomfortable, being comfortable being uncomfortable. And it's not, and people don't realize, but that's the only way you can grow. It's like going to the gym. Unless you're really lifting weights that are heavier, and you're feeling the burn, you're not going to grow your muscles, right? And the same thing with personally. So, for me, it's always just setting goals, and always trying to learn new things, which is why I wrote the book too. I mean, it wasn't like I woke up and said, "Hey, I want to be an author," when I was like, but what I came to realize was it gave me a better platform to impact more people, because because I spoke at a lot of conferences, and I noticed a lot of people were really interested in especially startups, because with startups you got so many things against you. What can you do that can really kind of increase your odds of success? And I started advising a lot of companies, and I thought, but it still seems like not enough people know about this. And how can you kind of get the message out to a broader group, subset of people? And then I mean, this may sound like a joke, but I can't live without a navigation either, right? you
So
know,
that's another very
that stops a lot of arguments with your spouses.
yeah, the shout at the map reader anymore. There's someone else
that's
to do it
that's
for you.
right. That's right. It's like, yeah. Oh, I don't know if you remember this, the old 80s A to Z books,
Yes,
right?
yeah, absolutely. I remember
I
I
mean,
had a sales rep job years ago
yeah,
where it
yeah,
had to go across different counties, and so you'd
yeah,
have an A to Z for each county.
yeah, yeah, yeah.
Thank
I
God
know.
for
But,
thank God for digital
but
systems.
that was the manual, though, right? I mean,
Yeah,
otherwise you would know how to get. I mean, but yeah, like I said, thank goodness somebody came up with a navigation, right?
yeah,
Yeah,
definitely needed it. For that last
yeah.
question, if you could spend an hour with anybody, dead or alive, who would it be?
That's a really good question. And I mean, for me, one of the things, I lost my dad when I was really young. I was like 17 going into 18.
Oh, well.
And so, you know, obviously I didn't have a lot of time, growing up. And it wasn't like he and I were that close, because I spent, a good chunk of my time. I was able to get like a scholarship and go to boarding school. So I was away. But, you know, looking back, one thing, I never grew up with either was my grandparent, really getting to know my because they kind of passed away early. So for me, it would be nice to, if I had the opportunity to maybe spend some time in, with him, but more importantly for my kids to really get to know him, because they never knew who their granddad was either.
Mm, it's true.
Yeah, yeah,
Yeah, my mum's mum died before I was born, so I never got
yeah,
to meet her either,
yeah,
and that would be interesting.
yeah. I'm sure, because basically the world's a whole different place now. It's
Oh,
kind of like being in that time machine coming back.
yeah,
It's like, yeah, like, I didn't think you were going to do anything with your life, but oh well, actually you didn't do too badly, right? Yeah, all right. Thanks,
yeah.
Dad. Now it's time to go. Now, just wanted you to see that.
I love it. Where can people find you, Lomit?
Yeah, best place to find me is on LinkedIn. And like I said, anybody who reaches out to me, or wants to connect, I'll connect with anyone. I'm happy to share, provide any advice. If it's worth anything to anyone, ask me a question, I'll be happy to answer it. And then outside of that, I have a blog, which is pretty much my name, lomitpatel.com. I publish a lot of articles and stuff there. So both those are really good places to get in touch with me.
Perfect. Well, thank you very much for giving it me time, and We'll definitely have to do a follow up on specifically on the book and
Yeah,
how we can leverage AI, because I think that'd be a great conversation.
definitely. And I was going to say, if anybody's interested in the book, Lean AI, Amazon's the best place to buy it because they're,
Yep.
yeah,
And I'll make sure there's when this goes
yeah,
live, there'll be a
yeah,
link directly to that from our
yeah.
website as well.
Okay,
Lovely.
great.
Perfect. Cheers, Lomit. Appreciate the time.
Thanks, man. Thanks for having me.
Cool. Thanks.
Thanks.